Good evening, ladies and gentlemen. Welcome to yet another Smartkarma weekly forum. As is customary, we're going to start off with a very quick introduction. The forum is a high impact weekly live webinar being broadcasted for Smartkarma Plus subscribers. In the forum, we discuss the best, highest conviction insights surfaced across the Smartkarma network. We dig deep into big themes and allow members to ask questions directly. As of last week, we've made the forum shorter and punchier. It will be just 15 minutes and followed by 5 minutes of Q&A, if any. The forum will be available offline since you can't always attend live in person, and you're more than welcome to share this with friends or view it at your own pace. Quick disclaimer, the forum is strictly for subscribers. It's meant purely for informational purposes. It does not constitute investment advice. It is the opinion not of Smartkarma, but that of our inside providers, and Chatham House rule applies. So please do not share the content without express permission. So where did we leave it last week? We revisited Kunlun, which is a high conviction idea in the Chinese gas utility space. We looked at the extraordinary case of Shineway Pharma, which is a pharmaceutical company that has evolved into what can only be best described as a pharma REIT. And we also looked at Alibaba and we considered if Charlie Munger is in fact right by buying the stock now. This week, we will shift our attention to these three ideas. First of all, we will look at Ciputra, which is one of the top 3 property developers in Indonesia. Then, close to home here in Singapore, we will look at Starhub, a boring yet extremely exciting name. And lastly, we will look at AEM, which is a fairly interesting semiconductor company that is really climbing new heights. So let's kick off. Ciputra, this is a name that's very well covered on the Smartkarma platform. As I mentioned earlier, this is an Indonesian property developer. A few quick things. It's got a market cap today of about $1.5 billion US, and it trades just under $3 million a day. And as you can see from this 5-year chart, the stock's basically gone nowhere. But as the subtitle suggests, this is a name that we think could be seeing a multi-year upcycle ahead. Let's take a quick look. First things first, let's look at the charts on the right-hand side. Indonesia interest rates are now below 4%. Right before GFC, they used to be 12%. I think a lot of people miss the fact that one of the most populated and extremely exciting emerging markets is now sitting on an interest rate level that is as low as this. Secondly, it's a slightly smaller chart on the bottom right, but you will notice here, this is the home ownership rate. And the blue line here is the total loans outstanding towards homes. So this is mortgages. And you can see that for the last 4 or 5 years, mortgages have not really grown, but they're just starting to take off. And here on the extreme right side, we compare Indonesia to Philippines, Thailand, Malaysia, and Singapore in terms of housing loans as a percentage of GDP. And Indonesia is marginal. What this tells you is that once mortgages start growing in Indonesia, you will see a multi-year re-rate in the real estate market. And the whole thesis with Ciputra seems to suggest that we are right on the cusp of that. How do we know this? Well, first of all, the government has cut the property tax basically to 0. Secondly, foreigners can now buy property easily in Indonesia without any constraints. Thirdly, banks, when we speak to banks in Indonesia, all of them have aggressively started lending to property. Fourthly, up until the end of this year, the loan to value ratios for property purchase for locals is literally 100%. You can borrow up to 100% of the amount of the property in your bank loan. That's extraordinary. And what that's translating into is a extreme appetite now to purchase property. FOMO is very visible in the first half results that we saw, where Ciputra showed a 43% growth in revenue and profits that actually grew, several-fold that. What makes it even more exciting is that Ciputra has over 40 years of land bank. Let me repeat that, over 40 years of land bank. So just think about this. This is a $1.5 billion company that is probably the preeminent property developer of a country the size of Indonesia. At a time when interest rates are below 4%, mortgages are just starting to grow after 4 years of decline, and total outstanding home loans is negligible. I think that sets a very, very interesting picture indeed. With that, I'm going to move on to the second idea, which is Starhub. Again, this is an idea that's well covered on Smartkarma. It is one of 2 telecom companies that is listed in Singapore now. The market cap is about $1.6 billion US. It's a high yielding stock, about 4% yield. And as you'll see from the chart, this is a stock price that's plumbing 5-year lows. But the good news is that the stock has flatlined. It's not broken new lows since perhaps July or August of last year. So all of this, to a certain extent, makes Starhub quite boring. So what is the exciting part? Well, first of all, is the most obvious thing. Starhub is actually a reopening play. And people don't necessarily realize that, but actually a decent part of Starhub's revenue comes from roaming charges. And as you know, Singapore used to have a very, very high number of tourists and visitors come through its shores every single day. So once that starts to happen again, and in fact, it's happening right now, Starhub's roaming revenues come back. This is extremely high margin business for Starhub, and it drops straight down to the bottom line. Secondly, Starhub is also a 5G adoption play. I'm not sure about you, but I've recently gone and purchased a 5G phone, and together with that, I upgraded to a 5G network plan. And guess what? I'm paying a lot higher now than what I was paying before I did that upgrade. Thirdly, Starhub has fairly intelligently diversified into enterprise business offerings. And the most prominent amongst them is a cybersecurity business that is growing really fast for them. But none of those things make us as excited as what we feel Starhub is doing quite secretly, yet in front of our noses. We think Starhub has recognized that at the end of the day, it's a subscription service with fairly sticky customers, but they're only selling 2 products. They're selling a voice plan and they're selling a data plan, and to a smaller extent, an SMS plan. But what if it could sell a lot of other subscription services, utilizing the same distribution that it has? And guess what? Starhub has just started doing that. You now buy your Disney through Starhub. You now buy your Amazon Prime Video through Starhub. In fact, you even buy your NVIDIA games now through Starhub. All of these are additional subscription businesses where Starhub does not really incur any cost of goods sold. And with just a little bit of extra OpEx, it clips incremental revenue. To us, this makes Starhub a SaaS company or a subscription company. And SaaS companies trade on 20 times price to sales. But Starhub is trading on 1 times price to sales. And that's what makes us extremely excited about Starhub. So in the very, very short term, you will see earnings and revenues recover. You will be paid a 4% yield to wait. But in the medium term, you could potentially see an extremely attractive re-rating for Starhub as the world begins to realize it's not a boring telco, it's an exciting subscription company. And with this, I will move swiftly to our third and final idea. This is a Singapore-listed semiconductor company called AEM. The market cap has recently crossed $1 billion. The stock trades over $9 million US a day. And some of you might remember, from reading in the news, Temasek recently took a stake in this company as well. So a few key things. AEM has one big customer, which is Intel. And Intel, if you follow the results, has guided that it is ramping up its production capacity significantly. What that means now is that AEM will also see a significant increase in performance. And that we saw very, very clear evidence of that when we saw the third quarter results from AEM, and when we saw the management significantly increasing its guidance from 460 to 520 million, which was the old guidance, to 520 to 550 million. Not just that, but actually as AEM ramps up with Intel, the management is getting increasingly confident of closing several more new partnerships with some of the largest semiconductor companies. And I guess this might have been the angle which attracted Temasek to take a stake in this company. Last but not the least, AEM would be a perfect candidate for a dual listing on NASDAQ. And with significant new customers coming to the flock, this is a name that could easily re-rate to 20 times PE, which is why Nicholas van Broekhoven thinks this could be worth 8 Singapore dollars a share. And with that, oh, actually, before we move on, one last thing. If you look at the chart on the right-hand side, there's a little footnote there, which is interesting. So AEM recently held a conference call where 76 investors dialed in. Now, let's put this in perspective. This is a $1 billion small cap. 76 investors dialing in is a lot. And these included fund managers from Millennium, Schroders, Point72, AIA, you name it. So this is clearly a name now that's on the radar of a lot of big funds. And so long as the management executes on its guidance, the re-rating potential is high. And with that, I'm going to open it to you guys for questions. You can use the Q&A button on your Zoom app to ask questions. Looks like we did a pretty clear job. So if there are no further questions today, I'm going to wrap this up. Once again, a reminder, the forum will be available on our YouTube channel for you to view or share with friends in a few days' time. Thank you very much.